Hi, this is Alessio. Hope you're well. So just a very quick video for you because obviously this morning I'm sure you've heard the shocking news, which by the way I could not even believe myself when I first read it. My cousin actually sent me a text this morning about 7 hours ago, 9 o'clock or 8:30 I think it was UK time, with the news that President Trump, obviously I'm sure you know about the news right now, but President Trump and Melania Trump have both got coronavirus, COVID. So obviously very upsetting and shocking news. So before we come and take a look at the chart here of the stock markets, and by the way, I want to take a look today, very quick look at the chart of junk bonds today as well. But before we take a look at these charts, I want to first of all just say, look, the main thing is that we hope and pray that President Trump gets well. We hope that he recovers. I was planning to release a video tomorrow, by the way, because tomorrow is about, I think it's about exactly a month away from the elections. I was going to release my predictions on the US election based on the stock market. So I won't be doing that now because I just don't think it's decent. I don't think it's appropriate right now, given the current conditions, for us to even speculate about the elections. The main thing is that we hope and pray that President Trump and Melania Trump both recover and they get well. And we certainly hope the best for both of them. So let me just quickly just show you this chart here of the stock markets. First of all, the stock markets today actually reacted pretty badly. They did drop. This is the futures, the S&P futures. By the way, just to let you know, as I'm making this video, the markets have bounced back sharply today. This is the hourly chart, the S&P, and you can see the S&P has actually had a nice bounce today. Let's see what happens, whether we see some follow through or whether it's just a corrective bounce. We'll have to find out by the end of today on the S&P. But so far, it seems the markets have managed to have a little bit of a relief rally, or at least some kind of reversion back to the mean. But nonetheless, it seems the uncertainty given the elections is now causing panic in the markets. If we just take a look at the VIX, the fear index, this is the VIX, the volatility index, or sometimes called the fear or uncertainty index. You can see we had a jump, we had a bit of a pop here in the VIX, which again is showing uncertainty among investors today. And it's not surprising. Now, here's, let me just give you some background here. Obviously, well, I've been listening to the news now for the last few hours. The main reason I've been paying attention to what they're talking about in the news, because they're saying now, well, okay, President Trump has got COVID, but what if Vice President Biden has acquired it too? Because nobody knows exactly when this virus spread. For example, one question they're asking is, could the virus have spread from President Trump to Joseph Biden during the debate they had a few days ago? That's a possibility, in which case if it has, then that could significantly affect the election because, again, if Joe Biden also gets COVID, obviously we hope that doesn't happen, but there is this uncertainty now as to what's going on here, what could potentially happen in the election, all right? So I think investors are reacting to it, as we can see here in the VIX, the jump in the VIX today, the uncertainty, the fear index. Here's the thing, guys. The main thing to watch is not so much the stock markets, but what's happening in the junk bond market, okay? Junk bonds. Now, junk bonds, notice I mentioned this in the previous video too, by the way. You may recall in my Sunday video, I brought your attention to junk bonds. I won't repeat everything I said back in the Sunday video, but I said before that junk bonds, there are two kinds of bonds. You got the quality bonds, LQD, you got the junk bond market. One reason why investors buy junk bonds because it pays a higher interest. But here's the thing. Whenever things get pretty hairy, whenever things get pretty scary or chaotic in the markets, whenever there's uncertainty in the market, junk bonds get sold. Why? Because obviously investors don't want to hold on to something that is high risk, and as you can imagine, junk bonds are high risk. So nobody wants to hold on to something that is high risk when there's uncertainty. Look what happened in March. Back in March, you can see the junk bonds sold off when it broke out of this this kind of pattern, this pennant formation, and then they sold off, as you can see here. Same thing happened in October 2017. Same thing happened just recently in September 2020. So as I said before, let's keep an eye and see what happens to the markets today. The key level on junk bonds on HYG is 82.9. We have not as yet closed below that level. We have actually moved out of the pennant triangular formation here, this coiling pattern. Yes, we've done that. That appears to be a bearish pattern, but I want to see confirmation of this by taking out the lows that we made recently. In other words, if you just go on the weekly chart for a moment, this is the weekly chart. And if we just zoom out a little bit, yeah. So I said to you on Sunday, I want to see if the market, if HYG closes below 82.9 to significantly increase the probability that junk bonds are getting sold. At the moment, as you can see here, we've not yet closed below that level. We've had a bounce. I said last week on Sunday, I said very likely we could see a bounce. We've had that so far. We've not as yet closed below the key level, 82.9. Let's see what happens this week. Let's see if by the end of the day, or maybe by next week, we get a close or indeed a break below 82.9 or not. If we don't get a close below 82.9, then potentially we may be in safer territory. But if the junk bond market does close and break below 82.9, especially on a weekly basis, then that increases the probability for significantly more downside pressure and potentially junk bonds as well. In other words, guys, what I'm saying is that a movement below that key level, okay, in other words, a break and movement below 82.9 could potentially signal downside pressure across the markets. And until that happens, I'm going to keep an open mind. All right, guys. As yet, we've not seen that break below the key level. All right, guys, that's what we have. And again, I hope that the president gets better. And I'll see you guys in the next video update. Cheers. Bye for now.